Okay, well, once again, thank you everybody for taking time from your Friday to join another webinar from ProFuncom, from myself. And really, this is a follow-up from last month's webinar, which got a huge amount of traction around the topic of why are fund managers still marketing as if it's 1998? And whilst it's always easy to say, hey, this is what you're not doing, a lot of people ask us, hey, what should we be doing? So I thought, right, let's do a webinar. Let's go through the fix and what fund managers, fund marketing teams can do to actually get all the parts of the investor engagement cycle, the investor cycle, the investor flow, investor cadence, whichever words you like to use. What does it actually look like, and how can this be applied to an organization? And it doesn't matter what product you use. I'm very much, obviously our logo is there because it's nice and big, but you don't need our product to do this. You can do this with Pardot, Marketo, gosh, you could even try with MailChimp. No, probably not MailChimp, but HubSpot, all these products kind of do similar-ish things, but it's not the big thing is it's not a product thing. It's a business thing. It's a mind share thing. It's a culture thing, how you get this right. And that's been my experience over the last, it's approaching 30 years doing this. So really a little bit about ProFuncom. If you didn't know, we've spent the last 20 odd years helping fund managers raise assets using digital analysis, digital engagements. And we have, 400 users of our product globally. We send out quarterly reports, and if you're clients of ours, these get sent to you by print, all available via our website as well to download. And our latest report is really, we've reviewed the digital marketing of the top 100 hedge funds, and we've kind of ranked them based on a whole set of criteria we have. And on the basis that whilst it's not the be-all and end-all of your marketing, the website weirdly is the canary in the mine to say how well your marketing is performing. So your marketing culture is, what your brand voice is, how you're doing your demand generation, how you're doing all of these things. Really, if you're doing it well, it does reflect in your website. So it's not perfect, but there we go. The other thing about ProFuncom, I've mentioned HubSpot, which is a top right leader, active campaign, top right leader for generic products. We are actually the mirror. So that's us in the bottom. That's us in the corner. If you're a fan of REM, that's us in the corner, and we are a high performer in a niche sector. So that's where the differences lie between generic product and us, just to kind of give you a sense. And our clients are scattered around the globe, which is in green, and blue, well, that's where our offices are. Right. So what predicates great fund marketing, and what predicates the joined up part of your investor engagement journey? And it really is, step one is the plan, which lays out your marketing in these 5 columns, these 5 silos, 5 processes, whatever you choose to call them. Now, when people say, oh yeah, I do a website, that is very much not part of this. And when people, what does a new marketing manager do? They come in, they say, we need a new brand, we're going to get some agencies in, we're going to get a website, we're going to improve our social, we're going to do podcasts, we're going to do all these kind of things. But it really is unmeasurable and unquantifiable unless you've got these 5 things laid out. And that really is your fund narrative. How are you creating brand awareness? How are you doing demand generation? How are you measuring engagement and the analytics that come out of that? Now, the tech stack really sits around the demand gen, the engagement, and the analytics. But what culturally it sits around brand narrative and brand awareness. If those are the 2 things that do not require anything outside culture and internal discussion. And that then permeates into demand gen, engagement measurements, and analytics. What that then ends up doing is that it basically creates an echo chamber of creating content, brand, and actually looking at what's working, analytics. And once you've got that automation working, that kind of feeds essentially the funnel. And I don't need to tell anybody here what a funnel is, but essentially the modern funnel is all about how are you capturing engagement analytics and how you're automating that. And what really needs automating is really the middle part of the funnel. The middle part of the funnel is the great unknown. And it is a multivariable problem because you could do one thing that appears to do actually nothing, but that's having the biggest impact. And, you know, one of those really simple example of this is when a hotel gets rid of the doorman because they're sold, that if you get automatic doors, then you're saving costs and you're making it efficient. But what you don't realize is there's a hidden function, there's a hidden attribution of a doorman. Is they know taxis, they know local events, they know local routes, they know what things to avoid, all of the above. So that gets lost. So just pulling one thing out from your marketing just because it isn't working is a dangerous thing, because marketing is a multivariant problem. And we actually don't know which works. And at the mid-funnel, if anybody says, I know how the middle of the funnel works, they are essentially lying. So it really is consistently running marketing automation on a consistent basis. And then from that also A/B testing to see what works and what doesn't. And then you kind of get into the investment cycle where due diligence and all the kind of good stuff happens. But really it is how in our world, which is fund marketing, do you take a long tail sales cycle and have the ability to automate that? Now, what it really looks like, the end goal, the whole joined up process, is the ability to at any point, and I'll come into the, I'll talk about this in more detail in later parts of this presentation, is the ability where you can actually in real time click on a particular country, see who are the people that are engaging with you, and then you have the ability to drill down further and actually see, okay, what has this individual been doing with us? So this is a, you know, just an example of that, where you can drill down to a really granular level. So you've gone from the top part of the funnel all the way down to the end of it. And that's really what it looks like. And that's how what we're going to go through today. So what we're going to go through is, what does a joined up investor journey look like? What manual processes to keep, which ones to jettison. Probably the most important one is how marketing, IR, and distribution operate as one team. You know, one team, one dream, all of that stuff. But the challenge is that everyone has got different priorities. So how do you bring that together? And how do you move away from being reactive with your follow-up to actually having something which kind of is also kind of known as being always on? And what does that look like, and how do you implement that? Okay, so what does a joined up investor journey look like in practice? So in essence, it really is pulling out signals. So once an investor has gone through the whole process with you, or part of the process, you want to be able to engage with these investors, prospects, in a way that is based and predicated on the signals that they've generated from their digital engagement. Now, that digital engagement could be email, website, social, investor portal, videos, Zoom, attending online or offline events, and breaking it down into some core signals, really sitting around behavioral analytics, and, you know, just to be current, a bit of AI. And what we're kind of pulling out here in this example is the ability where a salesperson, in this case, Sally, can actually see, okay, who are the people she needs to call? Who are, in essence, her low-hanging fruit? So who are people that are actively engaging with her that nobody has spoken to or she hasn't spoken to? So these are very much the unknown unknowns who've suddenly surfaced. You've then got cross-selling reports, and cross-selling is, okay, if I'm doing a fundraise, who are the existing investors that I should be talking to? Redemption risk is essentially which of your investors are potentially looking to walk away. And marketing alpha, which is the fourth column, is a signal that says, okay, who are the people that have not engaged with me, with Sally for the last 6 months, but in the last 30 days are suddenly reading content. So again, all these signals this is all in your data. And if you're doing email marketing and have a website, all this data is already in there. Is how do you extract it? And again, it's not 1998. The opens and people are reading your emails doesn't really matter. It really is how are all their behaviors connected together to make a phone call or to reach out. You've then got Audience Connect, and this is basically who are the users, who are the investors, who are the prospects that are on multiple real estates or on multiple digital real estate. So are they on Twitter? Are they on LinkedIn? Are they engaging with you there? Who are these people on these multiple platforms engaging with you? And obviously, which companies are the most active, most engaged, showing the most intent? So in essence, this is about viewing intent, but through different lenses. And again, this is the end goal of what you want to be able to deliver to the asset raising team. There are many ways to do this. In this example, it's delivered within Salesforce. We can integrate into all of these ones here. But other products are available. And again, like I said, all this information, if you're not using us, is in your other platforms. You've just got to pull it out. So that's what the journey looks like. Manual processes. So a lot of people talk about manual automation, and I've spent probably the last 5 minutes talking about automation. We do need manual processes. And the reason why we are sold automation, the reason why larger firms, especially when larger firm marketers go to smaller ones, they say, right, not only do we need a new website, not only do we need all blah, 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 we also need marketing automation. The trouble is sometimes the data quality is just not there. And when you're still a small manager, an emerging manager, or you've got a smaller universe as a salesperson, there is a sense that high value targets, that's a word you want to use, high value prospects, deserve manual attention. And that really is not looking at a holistic view, but having a list of people you're targeting and actually eyeballing their engagement. Now, what you can do is you can set watches on individual contacts in your CRM. So if they have any activity, that's highlighted as well. So that really is important, that you've got that process in place. Because again, even with automations, in our business as in fund marketing, it generally predicates not in another email, but if they kind of score in, they're going to get a phone call. And the trouble is, if you've got nobody actually actioning that data, then it's actually a pointless activity. So yes, having these processes is fine, having automations is fine, but you've got to do something with that data. And ultimately, no matter what you say, there are clients of ours who are raising billions that don't have a CRM, that are just doing very basic marketing automation with us. And it's very clear in their world, relationships are beating their systems. And it's primarily because their systems aren't great, but it's working so well that the investment they're making is in the tech is kind of minimal. Now, whilst those challenges are there, organizations as a culture have to decide, are they looking to scale up? So are they going from their relationships from 20 to 50 to 100 and 1,000 to raise more AUM, knowing that they're diminishing returns, or are they kind of happy doing what they're doing? Again, this one just kind of comes down to culture, where relationships beat systems. And, as I put in my last LinkedIn post, Victoria Johnson, our glorious sales director, her view has always been people buy from people. And ultimately, no matter how much AI you chuck at something, no matter how much process automations you chuck at people, the end goal in our business is to get in front of people. And now it is traveling, face-to-face, road shows, all that kind of pre-pandemic stuff it has all come back now. So yeah, manual process are part of it, and they do creep in, and they're not a bad thing. But the times you actually move to more automation is when your data quality is good and you've got more than 50 contacts. And I think 50 contacts is kind of the sweet spot for kind of Excel and a bit of email marketing. But after that, it really is kind of what we're talking about today. Okay, so manual processes still creep in. That's absolutely fine. Now, the next thing is, this is really the meat and potatoes of this presentation, is how can marketing, IR, and distribution operate as one? But they can't, because if you talk to someone in marketing, what do they say? Oh, we send stuff. No matter what the foo-foo is around brand awareness, most people in marketing, in hedge funds, asset management, some private equity, VC, all the above. Marketing, we send stuff. And people are so entrenched in doing that that's what they do. They don't look at any other things. They may look at analytics once in a while, but that's it. If you speak to IR teams, all they tend to do is they just basically respond to investors, and that's what they feel like they should do. It's not proactive. It really is, I am at the investor's bequest, and I'm at the desk, and that's what I'll do. And distribution, what do they say? We chase capital. That's what they do. And so the KPIs are misaligned, the processes are misaligned. It just doesn't work. And this really is where culture comes in. And this only works from essentially, what would I say, from a technology point of view, if all the data, all the systems are joined up. Now, the way to move this, the way to demonstrate, and I did get a question earlier on, is how do you get everyone aligned? Is basically marketing needs to be judged on how is it creating qualified engagement, however you measure that. Now, some people measure it as how many new people have engaged with us. Some people measure it as how many new people minus the people who are not engaged with us, has that gone up? How many new people that have not engaged with us but have previously engaged with us are suddenly engaging with us? Marketing looks at it like that. I think vanity metrics is the big danger here, where you say, oh, look, with our website ticks have gone up, 30%. Google Analytics or G4 is saying we're doing amazing. And you could then say, oh, our link, we've got more posts liked on link than ever before. That is a very, very dangerous game to go after, because the people who really are looking to invest are going to be silent on those platforms. And if you really look at the likes that you get, are they really your ideal investor, or are they just people? The other thing is on IR is judged on deepening that engagement. So basically, IR needs to take the ball from marketing and find ways using, behavioral analytics in tech to say, okay, what can we do for this person engaging with us? Can we invite them to an event? Can we, can they be part of a roadshow? Can they be part of a round table? How do we get further engagement from this? Do we need to send them tickets to the US Open? All of the above. So again, IR needs to not just be reactive, it just has to be proactive. And essentially, and again, how you measure that is a really good way of measuring that is cost of acquisition. Is how much does it cost to actually get from IR to somebody actually converting and putting money on the table for the fund. Now, cost of acquisition kind of sits between IR and distribution, but is again a really, really useful number to have. Because what that means, if you know your cost of acquisition and you know your conversion, you can actually accurately predict your marketing budget. Now, before the way you kind of do that, which I wasn't going to talk about, but it's an interesting segue, is you basically take your lifetime value of an investor, you take your cost of acquisition, and then work out a ratio between them. And if the ratio is 1:8, 1:4, 1:5, your marketing budget is kind of okay. And if those are the two levers you pull to say, if our cost of acquisition is low and our lifetime value is high, then you can actually put more you can put more into your marketing budget without a detrimental effect. And interestingly, why LTV, cost of acquisition, is so important, and I have done a webinar on this, is when you're selling more marketing budget, more pay rises for your marketing team, it's the language that the C-suite understands, other than how much more assets have come in to the business, which is what they all care about. But really is, if you can demonstrate that ratio, it really helps in your board deck to get better buy-in, because obviously marketers with creatives, C-level generally tend to be, and people who are running funds generally tend to be more numeric, more economists, more mathematicians. So they kind of need to see it that way. So that's really kind of working together. And once you've got built a culture around this kind of non-siloed view and this kind of codependency, it's being able within your CRM to see all the activity of a contact. So this is just an example where somebody has been on LinkedIn, they've downloaded fact sheets, they've been on a Zoom call, they have been on the investor portal, they have been on the website. So this is pulling all this data together. So you do need to have systems in place that are collecting this data. And more than likely, the data is in these systems. You've just got to use a tool. Our tool does it, but you can use Zapier to do this. Bring all this data together in one place, put it into your CRM using something like Zapier or MuleSoft or any of those no-code tools, and you can get this view of the data. And this is really where marketing, IR, and distribution will be working together, because hopefully your CRM is your single point of truth, and it all brings that together. And once you've got all those data points, you can start building out automations. And the automations are really, how do you, on different parts, as people are on different parts of their journey, what needs to happen at particular points. So if somebody has downloaded multiple content, if they have attended a webinar, what happens? Whether a salesperson gets an alert, whether they get another bit of content, do they get an invitation? And again, this has got nothing to do with the tech. This is all around planning. It's all around the culture of the organization and marketing, IR, and distribution working together. Okay, so that's how marketing and IR and distribution can operate as one. I hope you guys are doing that already. If you're not, pick a point, pick a starting point, move on from there. Okay, reactive follow-up, always on. Now, no matter which CEO you speak to, from, I would kind of say everyone I've spoken to, most people care about, are assets being raised? Is money, how are we preventing money walking out the door? And because I'm beholden to nobody, very few care about culture. And that is just the nature of the beast. And that is why changing culture is so difficult, and how no one has ever said, I've got a great culture in this financial firm. It's very rare. And that's what we're up against as marketers. So not only are marketing teams seen as non-mathematical, it's seen to be easy. It's also a case of, well, this is just a cost to me. Marketing is a cost. And the brunt of bad culture falls on marketing teams. And I've seen this the last 30 years. And there's a way to fix this. And it's the way to, how can you be useful? And that really is the key here. The key is, if you're, obviously quit if you don't want to work in finance, absolutely fine. But if you want to kind of make it all happen, is how can you, as a marketer, deliver to the sales team things that move the needle on the business, move the needle in what makes the business work, what makes the decision makers, dare I say, happy, and how does that elevate the marketing team's visibility within an organization? And it's not narrative, and it's not colors, and it's not brand, it's not voice, it's none of those stuff. It is what I'm going to try to show you. It is what I said earlier on. How can you take all that data, decide you're going to have a roadshow in, say, Guernsey, find out who are the people in Guernsey you should be talking to, delivering that to your sales team, and getting your sales team to start making those calls. So essentially, it really is having all the data in real time. And this is really is who you, so you know exactly, the sales team know exactly who to connect to at all times. And they can go into this whenever they want, and they are essentially in the process of raising assets. So once you're in that mode as a marketer, you're looking at raising assets, you're providing systems, tools, processes to the sales team. It is making the sales team job that much easier, because a salesperson, just by their psychological profile, are not detail orientated. They're hunters, they're not gatherers, they're not process led. A really good example is a marketing guy and a sales guy. They go to the jungle, right? Classic. And all of a sudden the marketing guy hears like a big rustling, doesn't find the sales guy. The sales guy says, hey, I've caught a tiger. It's right behind me. Can you cook it, skin it, or whatever you want to do with it? I'm off for the next one. And that really is their mindset. And that's the sales guys you want. So that comes with not filling in CRM, not filling in process, yada, yada, yada. But this is the tool of a real sales guy, a real relationship manager, a real biz dev guy, a real distribution person. This is what they need. And this really kind of gets you over the line as being seen as an asset to the business. So the next thing as well is, if salespeople do love an email, so an email with the people that they know who to contact with, again, always on, always ready, always in real time. It's not 3 days, 3 months, 3 weeks out of date, which is what we hear a lot, is that why call a list that's, a month out of date, because that's how long the systems have taken to generate it. There is no excuse for that. All the data is there, the tools are there. You can get this information out in real time. And finally, I spoke about this, being able to push that information in a way that it is categorized for action for individual salespeople. So that again is another example of, always being on for your marketing intelligence, your marketing engagement, your investor engagement. And it really does move the needle from the marketing team being seen as a cost, a burden, a waste, to actually something that adds to the business. And I do think that is because most marketers go in thinking we're about the colors, and it's like, you're not about the colors, you're about asset raising. So there we go. That is the session for today. If you're in Boston, in New York rather, in May, I am at a live event at Stevens Institute, the other side of the Hudson. So there is a link that I will send in the replay. We've got a few questions have come in, which I'll go through now. So thank you for that. I somehow I didn't answer them in real time. So the first thing is, what's a realistic first step to becoming, I like quote unquote, joined up without ripping everything we already have? First step. I would say, wow, that's a good question. I should have prepared better for that one. In my experience, assuming the culture is right, a simple audit to say where are all our data points for our marketing, so LinkedIn, website, email, investor portals, where are these data points and how can we bring them together in one place? I think that is the first step to do. And once you've got that, you can basically start mapping out what data points you can actually start to build automations around. What I would also say, if I was to kind of go back to my slides, is I'm making an assumption that your go-to-market strategy is all in place. So you've got your fund narrative, you've got plans for creating content for brand awareness, you're doing demand generation. Those are what I'm hoping are already in place. But if not, this is where you start: 1, 2, and 3. Okay. Hope that's helpful. Where do you typically see manual processes? So thanks for that, Ian. Where do you typically see manual processes actually adding value rather than being a problem? So that's from Anonymous. Thank you, Anonymous. There's nothing wrong with manual processes. And in our business, if you've got enough salespeople, if you've got enough relationship managers actively getting data, then and making phone calls, then that is absolutely fine. I think as well, there is accountability that is kind of has to be manually applied. And we've got a couple of clients who do this incredibly well, where the sales managers, the heads of distribution are looking at the engagement data and are in particular looking at this output. And at the end of the week are tracking how many people from what we call the lead deck, how many have not been followed up on. So that part of the manual process as well needs to be there. Oversight is important because we're all running in a compliant organization. And I would say that's the value add of having manual processes. And going with your thing, I don't think manual processes are a problem. Yeah, sometime when you're creating content for data accuracy, yeah, probably that's important, is automating as much of that so it's correct, but you still need manual oversight as well. So manual is good. Manual is not bad. And you need the checks and balances in place, especially in the world we're in, for that to not be removed. So on the fence, I sound like I am, but if you've got manual processes that work, keep them. I think I covered the next question. This is from Adam, is how do you get marketing, IR, and distribution aligned when they all have different KPIs? And I think this goes back to the slide that I had where I basically said, create qualified engagement, deepen that engagement, convert that engagement. And I think having that and then having a single source of truth in your CRM of all those data points, I think then that is a great place to be. And finally, how do you not overwhelm investors with always on engagement? I think what you're asking there, Anonymous, is there is an irritation, I'm sure, of getting a phone call because you've just opened something or done something. Always on slash real time, and this is leading back to the previous question of manual processes. I think you've just got to use discretion, and that's all I can say. So yes, don't give people a sea of emails on an email automation chain. Don't get someone just to call people up because they've done a single thing. I think I did. I was talking to somebody, and they said, don't get your team to dial harder or faster. Get them to dial smarter. And what that means is to actually take time, research who they're calling, and aim for 2 calls an hour. I know that sounds insane, but doing that, this person who has worked at a whole bunch of asset managers very, very successfully and has run sales teams for the last, I'd say, 40 years. Would you mind me sharing that? You may, too late. This is the thing. You don't dial harder, just dial smarter. And all the research you can do, having all this data to hand, is part of that. So yeah, so hopefully that answers that question. Just seeing, wow, only 3 people have dropped off this call. Wow. So I'm just seeing if there's any other questions are coming in. No. Well, all I can say is thank you all very much for joining this webinar. If you want to see me input, I mean, that sounds a little pretentious, but I'm around in New York on the 12th of May. I'm in New York pretty much every month. So yeah, thank you all for your time. Have a good weekend, everybody.